It is time for Cover Your Assets with Jim Lynch. Jim joins us on a Tuesday morning. He is an independent voice dealing with Wall Street, the economy, politics, sports, many years of experience in those subjects and more. Let's welcome him in this morning. Good morning, Jim.
Good morning. Good morning. I hope everybody out there, family-wise, had a great Father's Day. I know I did. My wife and I have seen our grandchildren and daughter and son-in-law first time in more than a year. And, wow, got a little energy in my step today, thankfully, to those kids. And it's amazing. They grow so quickly and they get smarter, and it's just lovely. So I hope you all had the same kind of experience.
You know, I agree with you. You know, I look at Father's Day as not a day to appreciate sons and daughters and to appreciate me, but I look at my family and how they all now have started their own families, and it just I find Father's Day to be quite the reverse, where I get so much joy out of seeing and speaking to my sons and daughters and their children. It's just an amazing day. Boy, you hung up on me again, huh?
No, I honestly didn't. You were still speaking, and you couldn't hear me.
No.
I'm very sorry. I don't know what happened. I don't know what happened.
It's the gremlins.
I was overcome with joy.
All right, well, let's change your overcoming with joy to a story that is just incredible, and that is not that the voting rights bill is doomed. It's not even going to be able to be debated and get on the floor of the Senate, but the thing that is so upsetting about it is the fact that the Republican leadership is not letting it being debated and to get on the floor. That is the annoying factor here.
I think you're right on with that. Everybody, including our congressmen and senators, are entitled to their view. In fact, we look for their viewpoint and opinion to help shape our country and our politics. But nobody has the right to abort their responsibility and not step up and take responsibility for what it is they believe in. And these folks who just don't want to participate, we should just vote them out next time based on that particular factor. It's so frustrating at this time with all of this stuff going on, which needs to be addressed beyond these two major pieces of legislation. What's happening to our country and the mentality of people and their very illiterate, keeping it kind, views of what is going on in the real world. So Congress is not really setting much of an example to help lead the country, and I don't know where it ends, but it will eventually end.
You know, it's like I said, I don't mind the Republican Party or the Democratic Party debating and disagreeing with an issue and putting their defense up. What I do mind is when it's not even allowed up for debate. That's just a part. But we can move on from that because that's not going to change anytime soon. And it's just one of those another struggles that we here with democracy in America will have to figure out one way or the other. But moving on to some business news here, Jim, you know, I know that you're probably not an expert in cryptocurrency or anything like that, but even the story out of China now, it's got to shake the market. They have cracked down and they wiped, now listen to this, they've wiped nearly $300 billion off the market in Bitcoin. This is an industry that is not regulated by anything. Jim, for the life of me, I know I get confused with Wall Street. I know I get confused with investing, but I know I get confused with a lot of that. But Bitcoin and cryptocurrency in a whole is just unbelievable to me.
Okay, so, some time ago we discussed this, and Jill has participated, and we've emailed back and forth, and we indicated to folks that there wasn't much behind Bitcoin other than somebody willing to pay a price, and then on the other hand, somebody willing to offer it. But we have informed people there is no regulation, as there is in the stock market and in the commodity market, and in the bond market. There's no overall regulation so that we can stop not so much speculation, but people manipulating the market. Now, we've seen this fail, actually, in things like GameStop, a stock that has been going crazy, but not really going where earnings was. However, back to Bitcoin, we also have mentioned people like the fellow who owns Telsa, speculating that, it's going higher and we're going to do this and that. And the market is moved by individuals saying things that they may or may not do. So somehow rank speculation has taken over in this particular area, and it's doomed to fail. I compare it to the tulip crisis in Holland. There's a book in terms of these crazes that go on, and in that book you'll find, would you believe, a tulip soared in price because people just got it in their head and they went crazy and they bid it up. That is what's going on in Bitcoin. Long and short, there's really no big bid and ask for this thing. It happens a little bit by appointment. And the net result is your liquidity, as we saw the past couple of days, is down 10%, like in a flash. So we warn people to stay away. We continue to warn you to stay away and just get out of the way. However, it's one indicator of kind of the beginning of the end of this tremendous bull run we've had in securities overall. I'm not really besmirching stocks, corporations, but we've just run the overall markets too long, and when you do that, you have excesses in things like an instrument that really has no intrinsic value called Bitcoin, and then things like GameStop, which are just crazy. The stock was selling at 10 and now it's 300 or whatever. Other than younger people getting involved in stocks, and actually I have found on a personal basis parents talking to me about kids getting involved in some of these Bitcoin things. It's just rank speculation. We're now seeing very smart people who've been around the markets for a long time talking about, this is really this frenzy. It's like it's going to be a break point, much as we had in 2000 with Cisco selling at 135, Cisco's, and then going to about 10 in a week and a half. You're going to see that in Bitcoin. So if you haven't avoided it, avoid it. Don't try and learn about it. There's nothing to learn. They're making things out of thin air with the computer. They spend a lot of power, electric power, computer power, saying, well, here this is and that is and so forth. The risks are more than just the market, though. I mean, you can lose your password. You can be outsmarted by speculators. And also, it's a great place for money laundering. In this last scandal where the Russians were hacking one of our chemical companies, they basically took the money in Bitcoin, which was sent to a wallet, which is a place where you do this trading with these wallets. And thankfully, the federal government was able to retrieve the money. You're going to see the federal government step in here, should sooner than later, putting holes on these things so that they don't trade so wildly. The thing of it is, if they don't, it'll just add to the crisis that is impending. And the stock market is way ahead of itself. Many people have 50 to 75% gains in various securities, maybe more, maybe less. And people are, like they did in 2000, and I recall it very well, having clients say, I need more, I need this or that. And they got scorched. They were killed. And I think we're in the process of seeing that. And last show we talked about interest rates and inflation and the Fed, and it just took the Fed saying, well, maybe we're going to have to tighten a little bit sooner than later, like 2 years from now or a year from now. And people who have big profits, you don't buy something that has to go up for you to make money, and it has to not go down so you don't lose money. So these people have been taking these profits, and I know we have been taking these profits steadily, and sometimes at much lower prices than where they are right now. It's just that when the market gets overly emotional, the risk factor goes from 50, 60, 80% to 200%, and that's where we are. It's bubble territory. Time to pare down, if you haven't already, your stocks. I don't think we have many professionals out there, but the stock market looks really like a good short. Generally speaking, folks, not individual stocks. So there we go. Bitcoin, avoid 30,000 today. It was 60,000 just a couple of weeks ago. And when Jill and I and you started talking about this, the thing was about 5,000. And it ran intermittently up to the 60 level we talked about. But again, it's based on fantasy. It costs an incredible amount of power to produce the chips. And one of the reasons the Chinese government has decided to come out aggressively, one of the reasons, is that it costs too much in terms of power to create these things. They need that power for their own industry and the homes of people, air conditioning and so forth and so on. Also, the Chinese government, and I believe our own government, though we haven't been specific, they don't want to see some unregulated so-called cryptocurrency begins to usurp the value of yuan, the Chinese currency, nor of the dollar. And all they have to do is start saying, we're regulating you, and we're regulating the dealers who deal in you, and we're going to want to know the credential of anybody who's trading these things. There's a lot of speculative money, but I would say there's a lot of money that is hiding things in terms of illegal profits and so forth. So just don't touch it.
It's, and there's people out there that don't understand the difference, that Bitcoin is part of cryptocurrency in general. They're not two different things. Bitcoin is lumped into that cryptocurrency because there's just a whole bunch of cryptocurrency that's out there right now. And Bitcoin, though, is the standard by everybody judges it, and it's now well below. It's fallen below 30,000. And if you were to look at the stock market, and a major stock, the leading stock on the stock market, had dropped 50% of its value in 3 months, that's a regulated industry. In a non-regulated industry, that's a big story that I don't think enough people are aware of, or enough news organizations are getting out.
No, they're not. They're not, because it's the whole concept is a bit of a fairy tale, and it's very difficult for financial journalists to truly get a handle on it. Also, I think there's a lot of pushback from people who are sponsoring this in the Bitcoin arena, many of whom are Wall Street type people. Wall Street is about making money, and Wall Street is about catching the trends. And a lot of people think that they can take advantage of the trend. Well, you can take advantage of the trend until the trend ends, and then it's disaster. If you try to understand it, I mean, sincerely try to understand it and put aside, well, Joe and Doris have been making a lot of money trading this thing, and look at the facts of this. There's no way you would touch this. There's absolutely no way. When you go and buy a house, you have an inspector look at the house, and you look and evaluate prices in the neighborhood and very practical things. You can't do that with this particular item. Again, this book was written in the 30s by Baruch, an economist, and the tulip crisis in Holland. Just think of that when you think of Bitcoin, and it will deter you from doing anything silly. However, I have noticed, and I'm repeating a little bit, young people have been really enamored of this thing. Some of them have gotten money from the pandemic that they didn't expect. Others just have the time to make the calls and to do the trade and talk to their buddies and this, that, and the other thing. This GameStop thing, which I referenced earlier, where these lesser stocks several months ago started moving up, was fueled by two things: discount brokers and young people who were looking to do something, either with their money or with their time. And a couple of these brokerage firms began to, very small brokerage firms, by the way, folks, to put out these stories. Well, there's a big short, for instance, in GameStop. There's a big short in AMC. And, you'll probably be able to do very well. And then this fed on itself. The stock started moving. The people who were short, which were primarily institutions and funds, they had to cover and trade and this and that. These frenzies come and go. This one with Bitcoin and these lesser stocks will go. This thing called Wall Street stock market, it's about investing. If you want to speculate and have fun and do this and that, you go to Vegas, and or if you're crazy, you call your bookie.
But that's the whole thing. But I think people have tended to look at Wall Street, the common person who sees people make profits and then don't understand that Wall Street and the proper way to invest is a very long-term investment. And if you're in remember when day trading was so big? Well, we're out of time here, but Wall Street you're in it for the long term, and these other things, you're right. It's Johnny come lately and here today and gone tomorrow. But we're out of time, Jim. What can I say?
My God, I demand more time. I'm going to my congressman.
Well, are you going to vote today in New York City?
Of course.
People make fun of California with the way they do their recalls and stuff. 13 Democrats are running in the primary today, and you get to vote for like 4 or 5 of them in different levels. It's going to be very interesting to see what happens.
Tell me about it. I was never really very good at crossword puzzles, but I've done my damnedest here.
All right, Jim, we'll speak to you next week.
Michael, good to hear you.
Take care.
Good to hear you.
Bye-bye.
Say hi to everybody.
I will do.
Bye.
Jim Lynch, and Cover Your Assets this morning here on the Breakfast Club on Robin Hood Radio.